Straight up.
Mr. Late Night, Mr. Vacations.
Yeah. All right. Staxx Sunday service. Today we are going to be talking about what to do when the market tanks. Uh, this is for informational purposes only. Trading and investing are risky activities. I am not a financial professional. You should direct all of your trading and investing activities towards your financial professionals and or do independent research on these topics. Okay, so with that being said, that's what I wanted to talk about today is what to do when the market tanks, because the last couple of days the market's been tanking, specifically tech. I don't know if you've been paying attention, but tech has been tanking. It looks like there's been a little sector rotation. And so I have like a four-pronged strategy for what to do when the market tanks. Number one, this is the best time to get your shopping list together. I've been preaching over the last few weeks, don't buy at all-time highs. Don't buy at all-time highs. Buy at a discount. Well, you finally got an opportunity to get a discount on the NVIDIAs of the world, SMH, the semiconductor ETF. A lot of other tech stocks have, come down over the last few days, where some of them I've seen are 10 to 20% down. So if you were looking for your opportunity to get in, this is the time, is during a pullback. Yes, you are taking some risk by buying things on the way down, but I believe you take more risk by buying things at all-time highs and on the way up. So, in the words of Warren Buffett, when people are fearful, be greedy. When people are greedy, be fearful. So, at this particular point in time, like, you should still keep your ratios, not your risk reward ratios intact. So if the market keeps falling, you can kind of cut some of your losses and then maybe pick something up a little bit lower. But this is the opportunity to buy some tech that people have been waiting for, because it looks like things have pulled back significantly in a few stocks. Number two, if you bought at good prices in the first place for your long-term investments, you shouldn't really have to worry. The Google Leap that I have, yes, it's down from $5,000, $5,500 of unrealized profit, but I'm still at about $4,500 of unrealized profit. So I bought my Google Leap at a really good price on a really good day at a really good period. So I'm not really worried about this tech fall off because I bought Google at one of its lows, right? So number three, if you did buy at the top and you weren't listening to me over the last few weeks, then you need to keep some percentage stop losses on your stocks, specifically your ETFs too, but keep a percentage stop loss. How much are you comfortable in risking? Is that 5%, 10%, 20%, 30%? Some people are comfortable risking 40, 50%. And giving it that much wiggle just depends on what your time frame is. If this is a long-term investment, if you plan on holding for 10 years, then your stock going down 20, 30% might not be a big deal. But if you have a shorter time frame, that might be a huge deal. So if you bought closer to the top, keep your stop losses tight, or actually have stop losses. And as we've explained, stop losses are like these automated things that you can put on your trade, where if it hits a certain level and it goes down by a certain percentage or to a certain number, it'll automatically get you out of the trade while the market is open. So if you bought at the top and you weren't listening to me, keep percentage stop losses. And then the fourth thing that you can do when the market takes is dollar cost average into stocks. So if you're somebody that's extremely risk adverse, put a certain amount of money into a stock or an ETF every single week, every single month. So that way you're buying at highs, you're buying at lows, you're buying at middling prices. And then you're pretty much just getting the average of a price over time, especially if it's a stock like Apple or Microsoft or Google or Amazon or one of the Magnificent Seven that you think is going to go up significantly over time. You could just dollar cost average into the market. So if you're dollar cost averaging into the market, you probably love that this little dip is happening because now your money's going to go a little bit further, right? So if you dollar cost average into stocks that you believe in or that you think are going to be around for a significant point or for a significant period of time, meaning they're going to do well, you believe they're positioned over time to do well, then just dollar cost average and forget it. That's a way where you don't really need to look at the market every day or every week. Is if you're just putting a certain amount of money into a stock or an ETF every single week, every single month, then you're not really worried about what the market.
Yeah.
You're a boring guy. No one in the history of a stock class has said, let's look at Costco first. Yeah.
Hey, come on now, man. Slow and steady wins the race.
All right, let's look at Costco. And I love Costco, but even Costco's had a little bit of a dip. We're in a 1 year day chart. Just to show everyone my process, typically what I'm going to do if we're looking at a stock for the first time, I'm going to go to a 5 year month chart. Can you see my screen, DeAndre?
Yeah, I see it.
All right. So this is a 5 year month chart. Well, the reason why I zoom out, making sure that these candles are monthly candles and making sure that we're at 5 years of time, because if you're doing a long-term investment, you want to see like how has this stock been performing or this instrument been performing over the long term over the last 5 years if I plan to hold something for 5 years. So as you see with Costco, if you would have bought Costco 5 years ago at $237, you would have almost what, two and a half, three extra money. So Costco does look like a really good long-term stock. And I love Costco personally, right? So this is kind of like a slow and steady stock. I'm not sure if they issue dividends, but I feel like it's the type of stock that does. Let me go check
I
really
thought they
quick.
do.
They probably do. It would shock me if Costco didn't issue dividends. Here it is.
How can you can find that out?
Yeah, generally on the dividend date. So especially if I go backwards towards recent earnings, yeah, they do issue dividends. They issued their last dividend on July 26th. So yes, Costco is a dividend stock. So going back to the chart, first thing I'm going to do is pull up my Fibonacci retracements tool. And then I'm going to start from the high at 896.67 and draw all the way to the low, which is 237.71. If you don't get it perfectly, you can right click and go to edit properties and just make sure that all of your numbers are dialed in correctly in terms of your highs and your lows, right? Bam. So that's a fib level. So then once I do that, then maybe I'll go zoom into a 1 year, 1 day chart like this, right? So looking at Costco, I do like this as a trade, maybe, because look, it tends to bounce off of its 50-day moving average, right? And so it's getting close to the 50-day. In fact, it crossed it. It looks like on Thursday, right? And then bounced right off of that. So if I were to trade this, or even swing this, which is more of a longer trade. So when I say trade, I'm usually talking about like day trading, meaning I might be in and out of this in a day or two. And swinging, usually that means it's going to last either from like a couple of days, potentially to a couple, 2 or 3 weeks, depending on how far out I go with some options. But if I'm going to trade this or swing trade this, then I love picking it up close to this 50-day moving average, because if you look back, it's tended to maybe dip under it a little bit, but it tends to bounce back around this 50. It's rare that you will even get Costco close to this 200, which would be the place that I would really look to load the boat. But look, Costco over the last year hasn't even touched its 200-day moving average. So the best place to have picked Costco up has been at the 50. So this is what I mean. This would be a good place to enter a potential swing trade. Maybe even to take Costco long if you don't believe it's ever going to drop as far as this 200, which is around $722. How I always place things on my chart, let me take these levels off right here. I always have a 200 on my chart, which is this yellow line. I have a 50-day moving average, a 34-day moving average, and a 21-day or period moving average on my chart. So I just go back and look at the history of this. The relative recent history is when Costco gets to its 50-day moving average, it tends to bounce, right? You feel what I'm saying when I'm saying that?
No, no, I do. I do.
Right. So that's where I would think about picking it up. Wildly speculative like Nvidia, or it's not a tech stock, so I wouldn't be shocked if Costco was like Berkshire Hathaway and just decided to never do a stock split, you know. So you might have to buy a few shares, but that price is going to be really high. So let's look at another one. And then if you look, so I always like to do kind of like a percentage. So its high was 896.67 and the current price is 838.13. So
Mm-hmm.
everyone's always fearful when the market drops, but they're more likely to buy at all-time highs than when they're actually getting a discount, right?
What about Spectrum? Is Spectrum a publicly traded company?
I'm not sure. But look, so I'm just showing you. So Costco is about 6 or 7% off right now. So that's why I say I like it for a trade, but like to hold long term, I'm gonna want it to hit this fib level down here, like before I would take a stab at it, or at. So this is probably where I would take the first stab. Would be at this 78% mark right here, at around $756, and
Mm-hmm.
then where I would really want it is if it dropped down to like $722. But I would trade it potentially bouncing off this 50 right here. You may already be too late because it already bounced there on Thursday, you know. So I'm just in
I see.
that's my analysis of Costco. I don't think Spectrum is publicly traded. If it is, it's probably like under some other massive corporation or something like that. It might be
Yeah.
like a Time Warner company or something like that. But I'm
Let's
not
see.
sure. Nvidia, same thing with Nvidia. Look at this drop from 140 down to 117.93. So 117.93. So if you're a big Nvidia fan and you believe in this company long term because it has the best chips in the world to power the AI revolution, then it's 16% off right now. And as you can see, look at Nvidia over the last year. It hasn't even gotten to that 200 moving day average either. Tends to bounce. It might get a little wiggle under that 50, but it tends to bounce off of that 50. That tends to be the most discounted that you can ever buy Nvidia. And where are we now? Close to that 50. So a lot of people are afraid it's going to fall even further. The way that I get over that fear is I keep a stop loss. So if I know, hey, there's a good chance right now Nvidia, if it bounces, could get all the way back up to this high at 140, which means I got a chance to make like what, 22 bucks, 20 $23 if I want to trade this at least and have a target one be this high right here, right? And I would just keep a stop. Keep a stop. Go look at a weekly chart. And where's the next bottom right there? It's like at 111, 112. That's where I would keep my stop, you know? Because I'm looking at this candle. So you're just looking at ranges. The reason why you're looking at candles is because you're looking at historical price ranges. Recently, if you're looking, so we're at a weekly chart right now, a 3-year week chart. If you're looking at Nvidia, this last drop over this week, this is the pullback that everyone was looking for to buy a potentially good stock, you know. Um, so if that's the pullback you were waiting for, look at where all of these lows are hitting around where Nvidia is right now. That looks like a good place to potentially enter is where Nvidia is because there's a low one right here, low here, low here, low here. So this is a good place where it has been bouncing relatively recently is where we currently are. So potentially buying in right now and then keeping a stop right here at like 1 1150 underneath this candle, which was another low recently for that week. So if I just wanted to take a stab at Nvidia, I would try to get it around 116, as close to 116 as possible would be great. Keep around a $4 stop to get about 20 points of movement. That's a 5-to-1 risk reward ratio. That's better than a 1-to-1 or a 2-to-1, right? I usually like 10-to-1s, but Nvidia might be something I would rather hold long term, do a long term leap on potentially because I really like the stock. I would love Nvidia. I would load the boat of Nvidia at 103.50. Because look at the prices, right? That 21-week moving average over the last, what is this? Over the last year or so, that's been a good place to pick up Nvidia too. So that's kind of a place where, hey, it's going to be exhausted if it gets to around $100. So if it gets to $100 or $103, that's another place I would think about picking up Nvidia. Just looking at the price action. Let's look at some more tech. What did Apple do?
Let's look at also Google too, because I know Apple had an attack on Google
Okay,
as far as don't use it as a browser.
yes, but so the biggest issue with Google right now is not necessarily its stock pricing. You know, I have a long-term leap on Google where I bought Google right here. So that's why I'm saying like I was up 5,500 on those leaps. Now it's around like 4,200, 4,500, something like that, right? On my Google leap and uh, my unrealized gains on it. But I like that it's at the 50-day moving average, which is a good place for Google to bounce and a lot of other stocks. If you go look historically, same thing. Google a little less. Google has come down to its 200 a little bit more, right? But here's the issue on Google, and we talk about this every week. This is a good time to kind of go into what's happening on Tuesday. What's happening on Tuesday with Google? It's reporting
earnings report.
Yes, it's reporting earnings. So you don't earnings reports are 50-50. It can report great earnings, it can report terrible earnings, but you be making a massive bet right now. It's the most volatile point of a stock because that's when you really get to know like how well a company has been doing over the last quarter. So getting into Google right now when it has earnings on Tuesday is making a massive bet. On Tuesday, we're going to figure out if Google's going to pop up or if it's going to come down a little further, right? And I'm anticipating that. Even though I have those long-term leaps, like how much is it likely to go down? I do use this tool called Options AI to go find the expected move on a particular stock. If you type in Google, and this portion of it is free. Of course, they have a paid version. If you go to earnings, the expected move on July 23rd is about 6%. So if you go and let me get my calculator back. So Google's at 170, let's say 178 times, let's say 0.94. The biggest that Google is this, or the most that Google is expected to drop if it keeps this same price and doesn't drop like heavily on Monday, is supposed to be around 167. Right. So
That's what the numbers show. That's what you're projecting.
that's the projection if it does terribly, right? If it reports terrible earnings. If it reports good earnings, the most it's expected to pop is 178 times 1.06, which is 6%, is expected to go back up to around the highs, like right here. Right? And then so mathematically, what I also wanted to show you and something I've been learning, the way you can kind of figure that out is by going to the options chain too. And the one that expires the closest expiration date is July 26th. for Google. So you can go look at where all the size is. So if you go look at the open interest for next week and you go figure out where it is, it looks like there is more size on the put side than on the call side, right? If you just go look at the numbers. Let me see. Maybe not though, because the highest one here is 5,000 and I see a 7,000 here. Actually, it might be on the call side. So this is what I'm looking at then. So looking at the range by kind of looking at where all the volume is. Yeah, there's a whole bunch of volume right here. Maybe there is a little bit on the call side. So this is where all the size is, 7,900 people or orders or whatever, right? So the top range of Google right now, it looks like is at 195. And then looking at the where all the size drops off, like 180, which is kind of where it is right now, to 195. That's what the expectations are for next week. So, and then I'm just looking at the put side. You have some size at 170. So if it does drop, you got a lot of support at 170 too. So maybe I would even say like the range on Google is going to is likely going to be between 170 and 195 because that's where all the size is. Do you feel what I'm saying by that?
The range between 170 and what?
And 195, where Google is likely to move by the end of the week. So the expiration date on these options is July 26, 2024. That's Friday. We got earnings on
Okay.
Tuesday. So all of these people are betting on a range. And what I'm looking at is where all the size is, right? So look at the open interest. All of the open interest, or the most open interest on the call side, is at 195. So
Okay.
chances are people are probably going to start selling at 195.
I
and
see.
and here on the put side, there's a lot of open interest at 170. So people are
I see.
probably going to start buying, and that's going to be a place of support. Is going to be 170 because that's where all the size is.
So it'd
So
be in between there. That's what you're.
that's likely where the range of movement is going to be. And if you look at
Makes sense.
where we
Makes
just
sense.
said 6% is the expected move, and that was around 167, 170 is relatively close to that. And if you're just looking at the size, that's where the support is going to be. And where the resistance is going to be is where this size is right here. That's where all of the people and their orders are parked. So if I'm
Uh,
buying Google on a short term trade, I'm probably going to sell it if it gets close to 195 before the end of the week. That's the place that I'm going to want to sell it. Where I'm going to want to pick up Google is going to be close to 170, right? So the options chain can show you where all of the liquidity is. So if Google gets down to 170 to 167, which is what the expected move is, that's where I would intend on purchasing Google to probably swing it back up because I'm in a long term lead. So I wouldn't buy any more long term options or any shares. But if I'm swinging Google, I want to swing it between, what did I say, 177.66 times 0.94, 167. So the place that I would be looking to pick up Google would be around right here and right there. If it dropped to this level, that's where I want to pick it up. I know I'm at an edge because I'm looking at the options chain. The options chain is showing all the sizes right there at 170, right? On the
mm-hmm.
put side, and where I would be looking to sell it is like at 195. Like I got to get out because all of the other the volume is there as well. And then you can look at other places where it might turn around is where there is some more size. At 190, there's a lot of people parked at 190 as well. So 190 might be another level that it might take a few days to get past before it busts up through that, just to show you where some potential resistance is. 190, there's a lot of people betting it's going to turn around at 190. Even 185 to a certain extent, you're going to have some resistance. So I'm just looking at where all the volume is. But the biggest edges of the volume is 170 and 195, right? So same thing. If I'm looking to short Google, I would short it at 195. If I'm looking to buy Google, I'm going to buy it in that 167 to 170 range because that's what the expected move. The expected move off today's price is 167, and where all the size is parked is at 170. Right. And just to go back to get the expected move, right? And they're taking the options chain to try and determine what the expected move is going to be, where all the volume is. And it kind of makes sense, right? So if you are going to get into Google, or if you're anticipating getting into Google, my price to get in for a swing trade would be 170, 167 to 170. That's what I'm watching because it's likely to bounce from there because that's what people are expecting it to bounce.
That makes sense.
Yeah. So that's what I'm saying. It's like a lot of people are out here just trading and oh, I saw it go down and I think it's going to go up. But it's like no, but like it is yes, buy the dip, but there should be some math and
Yeah,
involved.
that's exactly what it is.
And
You
you might still be wrong, but the probabilities are going to be more on your side if the math lines up, you know?
yeah.
So that's what you're looking to do is figure out, hey, and then are there any other levels that kind of coincide with that level? And it does. Look at 170 here on the weekly chart. 170 looks to be a decent level on Google where it was resistance here, and then support here. So that 170 level seems like a good level to potentially dig in on Google, if it pulls back there. And then it's close to this 21-week moving average, which is between right where that zone is that I just drew. That's where the 21 period or weekly moving average is, and which makes sense. So, like, that's where everyone is expecting Google to bounce if it gets down to 170. And what I mean by being in no man's land, right now, Google's in like the middle of a zone. If you're considering this point, the top at like 190, 175, we're in like no man's land. You want to catch it on the edge where an edge where it's likely to bounce, or you want to short it where it's likely to fall. But taking things where in the middle, your risk reward is all screwed up. So if I were to trade Google of just the shares, I would hop in around 170 and I would set a stop below 167, right? And so that's like $3 of risk. And then
Yeah.
I'm trying to get it back up to at least 191, probably 195, because I saw that's where all the size was parked. So if my target is 195, that's $25 for $3 of risk. And that's what that's an 8-to-1 risk reward ratio. That's a better trade for like my account than taking it right here at 178 or 180 or something like that, right? So that's what I would be looking for. I would be looking to buy it at 170, stop out at like 166.95, 166.75 or something like that. And then I'd be looking to trade it all the way up, maybe have a target one at like right here at this high or this high here. If I was more conservative, I would have a target one at like 188.60, a target two at like 190, 175, and like a target three at like 190, right before 195, which is where all that size is parked on the option chain. Like if I had an extremely successful swing trade, and then that would be close to an 8-to-1 risk reward ratio. So I don't want a 1-to-1 risk reward ratio. I want a, hey, if this works, I'm going to make a killing.
Yeah.
If I'm willing to put up, 300 bucks, right? I'm willing to lose 300 bucks. I want to be making 2,400. You know, if it goes the right way, I want to make 2,400. If I lose, I just want to lose like $300. You know, or
All right, my brother.
whatever your size is.
I'm about to head out.
All right.
Gotta
So,
get back to it, but I appreciate you as always.
yep. Mo Staxx, Mo Kama Sunday service. Until next time, making it rain without the umbrellas.
All right, my guy. I'll
All
see
right,
you next Sunday.
deuces.
Oh.